This roadshow is brought to you by ResearchBytes.com.
Good afternoon, ladies and gentlemen. Thank you very much for being here again for our quarterly results for the second quarter of fiscal 15. As usual, we'll be starting with a few brief remarks from our CEO, Mr. N. Chandrasekaran, about the quarter, and then we'll open it up for questions and answers. So to start with, I'd like to invite Chandra to come and speak about the quarter.
Good afternoon and welcome you all for the earnings brief of our September quarter. I'm delighted to report that we have had another strong quarter. I'll try to walk you through the numbers. We have delivered a strong volume growth of 6.1% on organic basis. The revenues in rupee terms has grown 7.7% to 23,816 crores. On a constant currency basis, it translates to 7.4%. And in terms of the operating margin, we have delivered at 26.8%. And the net profit has also grown to deliver 5,288 crores. On dollar terms, we delivered 6.4% growth to clock $3.929 million. So it has been a quarter of very steady performance. Organically, the constant currency growth was about 4.6% and rupee terms was 4.9%. The Japan merger with Mitsubishi ITF added 2.8% growth on a constant currency basis. That's how we delivered 7.7%, 4.9 plus this. In terms of markets, our growth has been pretty well-rounded across all geography markets, especially US has done well, Europe has done well. India has in particular done exceptionally well, and also Asia Pacific and other markets. We had a slight degrowth in Latin America. As far as the industries, all our industries grew, and as far as the services, again we pretty much delivered a strong growth across the board. Our client additions have been strong. We added 4 more clients to the 50 million bucket and 9 more clients to the 20 million bucket. Employee addition for the quarter has been very strong. We added on a gross basis 20,850 employees. Attrition is steady. It's at 12.8%. So overall, I would say it's a very strong quarter, and we announced 8 large deal wins. It's been again spread across verticals, 2 in BFS, 2 in manufacturing, 1 each in 4 other verticals, including energy, utilities, and healthcare. Then in terms of the markets, the deal wins have come from US, 5 deal wins, and 2 from Europe and 1 from UK. So I think it's a holistic performance, and we're pretty happy with where we are, and I'll now take questions. Thank you.
First question goes to Nisha Poddar from ET Now.
To the management of TCS. Wanted to know about the margins. Could you give us the breakup of the margin that you have right now, and also the realization picture that you have seen in this quarter?
Yes, so from the margin way, the best way to understand is against a 26.3% margin, we have reported 26.8. So that's totally a 50 bips improvement. And the breakup of it is that overall we have improved margins by about 100 basis points, which came from 70 basis point one-off benefit that we had compared to last quarter on the depreciation side, another 20 basis points of operational improvement, and 10 basis points on the currency side, and offset by about 50 basis points of dilution due to the Japan entity merger, giving you a totally about 55 basis point improvement on a Q on Q basis. That's the overall margin story. What was the second one? You asked.
The realizations.
Realizations on a Q on Q basis are, so the way to think about it, the revenue analytics side of it. So you got a volume growth of about 6.1% on an organic basis. We have another 2.8% growth coming in due to the Japan integration, and we have a realization dip of about 1.5% and a marginal effect due to the on-site offshore mix, giving us a total of 7.7%.
Chandra, what has changed in the Indian market? You said particularly Indian market has shown results. Even Gartner came out with a report yesterday showing that there are good prospects in Indian market. What is it that has changed, and what is the kind of uptick, if you could give us the pickup?
There are two aspects to it. One is that we have been pretty conservative about the India market. Almost for 4 or 6 quarters, we said that we are not seeing opportunities, and we experienced degrowth on several quarters in the last fiscal year. Then towards the end of the last fiscal year, we said it is unlikely to pick up momentum, and we want to see the elections through and then the stable government through before we see companies spending money. So last quarter we saw growth in India market, and there were a lot of questions about is it going to grow further. We said that we would like to still wait, and we would like to see a second continuous quarter of growth, which we have seen now. So I am now feeling that India is back to growth again. This quarter has been a very, very good growth, and whether we will grow at the same pace is a question, because some of this may be projects that companies wanted to do earlier and they are spending now. But I do get a feeling now that we will grow from here, and we are seeing client spending happening, especially in the private sector. And there is a lot of initiatives that have been announced in the government sector on Digital India by the Prime Minister. So some of that will translate, probably not in this fiscal, maybe next fiscal. But overall, I feel India is back to growth.
Substantiate with some of the numbers that you've seen, what kind of growth and what has been the kind of contribution?
So you have the growth numbers for India. It's a double-digit growth on a sequential quarter basis.
And Ajay, I wanted to know, is there further enhancement of utilization? Is there any more room for that to help the margins going further, or is that lever is expected to be kept aside completely now?
We keep talking about it as to where is the limit, up to what point we can grow, and we have been saying that it's up to the business need at a given point in time, and there are certain investments that we want to make. Those are pretty much decided. So from a utilization point of view, we have been pushing it up, and we have said that at certain point in time, it's not the percentage that matters. One has to look at the absolute numbers. And given our strength, I think we are pretty confident of where we are at this point in time as far as utilizations are concerned.
So I think a couple of points, Nishan. I think on the India, I would like to make a statement saying that while the growth is very important and it is a good growth from India market point of view, on the overall company size it is still very small. Exactly. So it is not likely to push the overall revenue significantly, but it's very important to know that the growth is back and the teams are pretty charged up. Which is very important from overall company point of view. Second, on the utilization, I have always said that I think we should stop measuring it in terms of percentage. We are not shying away from investments. We continue to make as much investment as is necessary, because we are in a growth mode. We are pretty positive about the future, and digital is a big area, platforms are a big area, so we are not shying away from any investments. But having said that, our scale, I mean 310,000 professionals, I think offers us a lot of leeway. See, the one more point I wanted to say in the beginning, which I missed out, the happy news that we are going to be merging CMC subject to all approvals.
That was supposed to be my next question. So what is the rationale behind that? And how do you see then the numbers? Of course, now you hold 51%. Once the merger happens, I'm sure there will be more benefits out of that as well. So if you could give some projection on the numbers as well.
No, I think the way to look at the CMC merger is that, we hold 51% already, and then TCS already does significant amount of work with CMC in the sense that we subcontract some work. And CMC has a very strong presence in the domestic market, and they complement TCS in terms of the footprint they have. They have certain solutions in certain areas. So I think if we bring both the companies together, we can rationalize some of the cost structures, and also we can go to market better. So I think they will add to the overall momentum. So I think it makes sense to merge. So we are doing that, and whether it will. See, the numbers wise, when we report the TCS numbers in the domestic market or international market, it seems already consolidated.
Right.
So it's not going to change. So when we say X% of our revenue is from India, that already includes CMC revenue. So it is not that it's going to change that number, but I think our efforts will be now doubled because the teams are together.
And can't let you go without asking about the future outlook in terms of H2. Now, pretty much NASSCOM's target of growth is something that you're set to surpass for this financial year with the kind of growth you have shown in the last 2 quarters. And going forward, what is the projection for H2, the outlook, and the next financial year? In fact, that's something that the street is watching out for.
I think the Q3, Q4 is concerned. Q3 is typically a soft quarter. There are 2 things that I would like to mention. One is that the furloughs is a norm in Q3 because there will be some company shutdowns that will affect especially industries like manufacturing, high-tech, telecom. The second one is the retail industry goes on the holiday season period. So typically they don't take up a lot of discretionary projects, but they don't want to put systems in production. A lot of focus is on the holiday season. So these 2 factors will play out. That's usual. But apart from that, I feel the opportunities are very, very good across sectors, across markets. We remain very, very positive. And if at all, we are only increasing our investments in both in sales and also in capability building. And our hires should tell you something. We have already hired this year 36,000 people. We started the year by saying that our employee count this year is going to be 55,000 is the addition. We already crossed 36,000. So we remain bullish about next year.
Kritika, CNBC.
Hi gentlemen, congratulations for a good set of numbers once again. Before we talk about the numbers, I wanted to ask you, CMC merger, what is the timeline that you're looking at for all the regulatory approvals to come in?
I think, we can't give you exact date, but I hope that it will happen in 6 months if you get all the approvals.
Okay. Rajesh, typically when a merger happens, of course, there is a certain amount of deleveraging when it comes to margins. How will you manage to maintain margins at the current level post the merger? Any kind of a strategy that you have in mind?
It's a fully consolidated entity, so there will be no impact in terms of the reported margins. You will see some minor impact at the net margin level, where the minority interest which goes away will be replaced, because that will belong to the owners of this thing, shareholders, so which is in the range of about 30 to 30 crores or so in a quarter, which is not material.
Chandra, typically, of course, as you said, Q3 is a seasonally weaker quarter. How are you working to, because I remember last year you had managed to clock in and managed to mitigate the risk that you were seeing in Q3. How are you working to mitigate these risks? And of course, how will you maintain your margins and volumes? Because volume growth at 6.1% has come in phenomenal for the quarter.
As I said, I think, Q3 is seasonally weak because of the reasons and also the number of holidays that are coming in, because Thanksgiving in the US, then the Christmas season. So those things will affect the volume. So if you go back and look at any year, Q3 volumes are lower compared to the rest of the quarters. So to that extent, it will be a soft quarter. But as I said, the overall business environment is good. So we should look beyond Q3, beyond this fiscal year, when we see the opportunity. So we have to continue to invest, and which we will do.
Chandra, how is pricing for the quarter? Because there's been a sense amongst analysts that Q3, Q4, we could see a pricing decline. Are you seeing that trend yet in your clients yet?
No, typically there is not a pricing decline typically in Q3. Never usually, there's no seasonality like that. So I don't see that. But this quarter we have had a decline, the realization of about 1.5%. And as we always said, there are so many moving factors. Number of working days, sometimes monthly billing, sometimes the geography mix changes, sometimes the business mix changes in terms of BPO volumes adding. So it's very difficult to all related to pricing decline, but overall our stand has been that pricing has been stable, and we hope the demand momentum continues so that we can see some uptick sooner than later.
Okay, also the slight degrowth that you've seen in Latin America, is that a seasonal degrowth or could there be some traction expected going forward? And also typically emerging markets are volatile, but Latin America has been performing well for you over the last few quarters. So what was the reason?
It is not a seasonal degrowth. In fact, that was a little bit of a surprise element in the quarter. We expected that to grow, and some of the ramp-ups that were anticipated did not happen in Latin America, and that translated into decline, a small decline, but it should have been a positive growth. So to that extent, it has been a negative surprise for us this quarter.
So, but you don't expect this to continue in the next 2 quarters? Okay, Ajoy, typically this quarter attrition is expected to be slightly higher, but it's coming at 12.8%, which is good. Sustainable?
Yeah, from 12.3 it has gone up to 12.8, and as I said, it's primarily seasonal, Q1 and Q2, and going forward I think it should come down. So that is where we are.
So your
Already the
comfort
September attritions are
August
lower
and
than
September
August.
are coming down. So that's typical trend, whatever we have every year. The same trend is playing out.
So your comfort range for attrition then?
Comfort range, we would like people to continue in the organization, to grow, to make
But you
a
used to
career.
give
So
a
that is
range.
what we would like
What's
people
the
to do.
comfort range typically? 10, 11%?
No, we have operated even below that as well. So
Yeah.
we would like the attrition level to come down a bit. So
Okay, last
there is
question.
no comfort level per se as such.
See, it's not the percentage, 9 to 11, 12% is okay, but on our scale it translates into a lot of people.
It's 30,000 people if you look at.
So it's a big number.
10%.
So we would like to contain it as much as we can.
Okay, last question. Chandra, we've been talking about digital and how digital will change the face of the industry. Numbers have been vague over the last 5 years. Are you seeing any concrete transactions? Can you give us a number to the order book that you're looking at in FY15, FY16?
See, Kritika, the discretionary spend, everything that we see is in digital. Okay, so it is pretty significant, and
In terms of the discretionary spending.
discretionary spend, and even in ADM, everything that customers are reimagining when we retire applications, the entire customer experience program is all around digital. Whether it is social, whether it is cloud, whether it is analytics, everything is digital. So I think digital has a huge opportunity. I have already said that we will at least do 5 billion in the next 3 to 4 years. And the numbers are pretty encouraging. I'm not able to give you the number because we've not published it. We have to decide to publish it at some point in time. But numbers are pretty encouraging, and if at all, I would say that my estimate will only surpass. We won't fall short of that.
Surpass or? Surpass
Whatever estimate I have
$5
given,
billion.
5 billion when I say in the next 4 or 5 years,
Okay.
we'll only surpass that estimate, we will not fall short of that.
fall short.
And so when we start giving numbers, you'll realize that. I think it's a big opportunity.
But
Very,
within
very
digital,
big.
sir, what are the areas that you see the large deals coming in? Is it big data typically?
No, all customer experience. We call it multi-channel, omni-channel, mobile, different form factors, and then a lot of analytics, customer insights at the point of interaction with the customer, cloud infrastructure, both in terms of cloud on the infrastructure side and cloud from a platform side, whether it is applications horizontal in nature, applications which are domain intensive in nature, procurement platforms, analytics platforms, HRO platforms, or sales management platforms, or in a banking scenario, securities processing platforms. So all these things are moving to a combination of this technology. So when I say cloud, it is never one technology. It will be a mobile, cloud, social. It will be cloud, analytics, channel. So this is the combination of these technologies that are being deployed, and we have given you some sample engagements, and also we have given you sample of some engagements where we have positioned the TCS products. TCS also has invested significantly over the last 4 or 5 years, and we have created a lot of IP. And now we have started to position these IPs, and we have given you a couple of examples in the press release. You will see more of that coming quarters.
Good evening. Just wanted to know, is there something with regards to the timeline, with regards to the CMC merger? Is there something on the timing of the...
So as I said, we would like to ideally get all the approvals, both the regulatory and the shareholder approvals. If we get all of them through, it can get done in 6 months' time.
No, because this was considered some years ago and then it wasn't, and it didn't happen. So is the timing of the merger of relevance at this point?
I was not aware of any time in the past it was considered. If you know, you should tell me. Okay, so I think it is something that the boards have debated some points in time, and we felt that the size of the operation and everything else, and it's also a good timing to consolidate our India operation. So India operation is in the single digits. We want to take it to double digits. So considering all that, I think it made sense. So I think this is never a good time.
Also, can you take us through what's the kind of deal pipeline for the remaining part of the year, and which sectors do you see more deals coming in?
So the deal pipeline is strong, and it's across sectors actually. We are seeing a lot of opportunities in utilities, manufacturing, retail, media, banking, transportation. So all of these areas or all of these industries, we are seeing a lot of opportunities. We are seeing significant momentum building up in digital, and also in terms of the markets, I think US is very strong. Europe is also quite strong, and we hope India also will continue to grow.
Talking about the digital space, we have seen increased interest from customers, as you said. Is bidding becoming a bit of a problem? Is there some sort of a have to perhaps put in as far as bidding for these digital contracts go?
No, I think if you say digital, what is required? One is that first of all, you need a lot of capability. Okay, I think we have invested in people capability over the last 4 years. So we have whether it is mobile, whether it is channels, analytics, cloud, I think social. We have created a lot of capabilities over the last 4 years. And second is we have created significant amount of intellectual property, whether it is in terms of what we call as foundation software or vertical software. Foundation software or technology components which help you to produce digital solutions faster and better, and also domain-centric solutions we have invested. Third is we have created several platforms, cloud platforms, leveraging the digital technologies. And the fourth is we have invested significantly in terms of creative design, and we have created labs for digital marketing and the whole creative thinking. So those things also we have invested. So I think what we have is bring together what all these technologies mean, but totally in the context of the industry we operate in and the customer with whom we are working. And that exercise is what we call as reimagination. And so we made all those investments. So I don't see us having a difficulty in competing. In fact, I feel TCS should lead this whole space, and that's our goal, and I think we are all set to do that.
Yeah, I just had one more question on the CMC merger. In terms of employees, would there be any changes?
No, they'll be absorbed in TCS.
All of them would
Yes.
be, there's
Yes,
no
yes.
other change.
No, no change.
Thanks.
We welcome them. They are part of the family. Always, but now more close.
Already counted that also.
They're always part of the family, now even more closer. Actually, we will talk more about it at some point in the future.
Joshua, Economic Times.
Hello, sir. Just a couple of questions. So, on the BPO front, this quarter you announced, the Friends Life, the international operations deal. That is something you mentioned about Diligenta taking it to, more international markets. So, could you give me a sense of, how is that timeline going and how is the BPO business as a whole? Because now you're the biggest BPO company in India by revenue. How that business is?
So BPO business is growing very well. Overall, the BPO business has multiple components for us. One is the BFS related BPO, which had a huge push after the Citi acquisition. That's growing with a lot of clients outside the Citi group as well, because that's the client expansion. That's what we have done. But BPO business is growing across utilities, across travel, retail, manufacturing, and also a lot of horizontals. And we are also looking at a lot of automation, which actually we have implemented in some of our clients. There we have built some intellectual property. So I think BPO business is poised to grow, and we think we'll continue to maintain the leadership.
So, just one last question. ISG announced the the results for the quarter, the contract. ISG, TPG,
The research firm.
yeah, the research firm. So they said that in the third quarter, that bucking a trend, there were much larger deal sizes in the third quarter, and though they had seen deal sizes dropping in the previous few quarters. So is there any sense, are larger deals back?
We have always said that the opportunity is quite good. It's a mix of large and small deals, which is fine. We are generally positive about the environment. So I think if they say that there will be more opportunities, thank you so much.
Thank you, sir.
Aditi Devekar, Business Standard.
Hello, sir. I wanted to know, would you be able to throw light on the Mitsubishi revenue? And you said that your investment plans are quite strong. So, do we get to see some more JVs like the way you had with Mitsubishi? And if yes, in which all geographies?
With respect to Mitsubishi, it's 101 million for the quarter, 103 million for the quarter. And investments, I mean, we keep looking. If there is an opportunity, we will look at it. There's nothing that I can announce now. Commentary has not changed. We look at US, look at Europe, look at healthcare, look at different segments.
So just to add on that, I want to ask you, what are the margins of the Mitsubishi ITF? Are they lower than your, the
Yeah.
So then how do you plan to offset the impact, one? And second, the Japanese market has its own challenges, but this Mitsubishi thing gives you an edge. So what is your strategy there on growing this business?
See, I think, when we did this transaction, we said that the Japanese market is a pretty large market and pretty important market. So we attach a significant amount of strategic importance to this transaction first. In terms of the margins of the deal, I think they are less than 5% at the operating level, 3-4% at the operating level. And that also was known, and we communicated that it will be margin dilutive, and Rajesh mentioned that the dilution of margins due to that consolidation is about 50 basis points. And over a period of time, we'll improve the margin, definitely. I think we have a very strong client base due to this transaction. First of all, Mitsubishi as a group is a big client, and there are several Mitsubishi companies. And we work with several of them already, apart from Mitsubishi Corporation. Mitsubishi, they are in heavy industries, they are in chemicals, they are in power, they are in motors, in very large number of industries. And we work with many of them, and we need to scale those relationships. In addition to that, we have a number of other clients in the Japanese market who have become our clients because of this transaction. So we see this as an excellent opportunity, and it is our aspiration and determination to grow the Japan business in line with the company or ahead of the company. But how we will do it, Are there not challenges? Yes, there are challenges. There are there is opportunity, there is a challenge. So we need to work hard about how to make this market grow, and we have made significant investments. Lakshmi, who is one of our very senior guys, has moved to Japan as the CEO, and we have we've integrated the management teams between ITF and TCS Japan. There are other people who have moved from India in senior positions. So we've got a very strong team on the ground now. But all of this has to be cooked. So if you ask me next quarter or quarter after that, we'll do a miracle? Probably no. But if you ask me over a three-year period, we will make a big impact. I hope to. So there's nothing, no guarantees, but definitely.
Amol from CVSS.
Hi sir, good evening. My question is about digital. Since you're saying that digital area will grow, and most of the companies also believe in the same. What I want to know is, by any chance, are you trying to make some fresh investment in this particular area? And how are you looking at it in terms of coming with new products? You also said that India can have a growth, so most of the SMEs, entrepreneurs are also looking seriously at digital. So are you planning to develop some new products in this particular area?
See, I think the investments are continuous. It's not like a one-off. If you look at digital space, first of all, we have invested significantly in training, significantly in recruitment. The number of people who are getting trained or who are building intellectual property and who have been recruited into the company from different backgrounds, varied backgrounds, is pretty significantly high. So if you apply the utilization rate of the company into digital, it won't work. The utilization rate will be far below, primarily because we are in an investment mode as far as the digital is concerned. Then we are investing in intellectual property, both the foundation software and software in various verticals. What does a digital bank look like? We built the whole digital bank. If you go to our innovation center in banking, you'll see the whole digital bank. So similarly, if you see customer experience, we've got a complete customer experience, an omni-channel. What does it look like in a retail store? How do you reimagine a store operation? So we built a lot of intellectual property around that. So I think if you take each industry, these kind of investments are going on. And then we have got relationships with partners. So I think the investment is multifold. It is not about, is it 100 million this quarter or 50 million next quarter? It is about continuously doing all the right things. And then we have created a design studio, digital marketing in California. So I think there are so many different ways in which we invest, and we have got a lot of thought leadership articles, hundreds of them in this space this year. So I think it's a continuous thing. Okay, it's not, we don't see digital as one group. There is one group which is champions digital and creates all the infrastructure and intellectual property, but the digital is embedded very deeply in our banking unit, insurance unit, retail unit, telecom unit, every single unit is embedded. And that's the way we see it, and that's the way we see the industry will play out.
Also, since you mentioned that Indian market will see a growth, will see some improvement, from which sector you will see more growth? I mean, the government sector or the private sector?
Currently private sector, maybe in the future also the government sector.
Kritika from CNBC.
Sir, has there been a certain amount of softness in insurance as a whole, and will that continue for the going ahead?
Insurance, there has been a softness, and last quarter we said that we had a degrowth in Diligenta, and it's softened further. So there has been an impact in insurance, and hope it will recover sooner than later.
What geographies is the softness coming from for insurance?
So I think it's a UK business, right?
Largely. Okay. When do you expect that to pick up in that case?
So let's give it a couple of quarters.
How many?
Let's give it a couple of quarters, I said.
3, 4 or more than that? Also, sir, a quick thing on manufacturing. Manufacturing seems to have grown fairly strongly this quarter. Sustainable?
Yeah, as I said, manufacturing we see significant opportunities, but for Q3, manufacturing will be one of the industries which will be faced with furloughs.
Okay.
So Q3 will be a soft quarter for manufacturing. Manufacturing, high tech, telecom typically are more soft in Q3 than other industries because of furloughs, plant shutdowns, you know what I mean?
One last question. CMC, will this, post the merger, do you expect there to be, will TCS be better positioned to win deals specifically after the merger? Will this put you on a better footing when it comes to
Certainly in India, I think our teams will be together much stronger than on their own.
Chandra, the street view is that there is a tad bit disappointment when it comes to your organic revenues. It was expected to be a little higher than what you have posted. What is it coming in from, and has cross currency hit,
I think, see, you look at it this way. As far as the organic growth is concerned on constant currency, the last quarter was about 4.7. This quarter is about 4.6. So pretty much this quarter's organic growth is more or less the same as last quarter, maybe 10 basis points gap. Typically what happens is the street always expects you to do better in Q2 because Q2 is seasonally a better quarter than Q1. Okay, to that extent, definitely there will be a disappointment because the street had expected from, I think I saw the estimates, from 4.7% last quarter to 5% this quarter, whereas we have come out 4.6%. There is a 40 basis point gap. And the disappointment has come primarily due to 2 or 3 areas. One is the softness in insurance. Though retail has done very well this quarter on a absolute growth basis, if you see, it has done very well. But actually it could have done better because there were some ramp-ups that we expected did not happen, and there has been a slight degrowth in Latin America. These are the 2 or 3 things which have contributed to probably an additional growth that we could have had. To that extent, I think that 40 basis point gap we can explain.
All right, and one more question. Will the hiring now go down because of the automation? Is that something that can be expected as a constant question?
We are not planning to decrease the hiring at this point. We will see. We will see in the future.
And most of the companies around you, competitors, have been making acquisitions or talking about acquisitions. What is your strategy on that? Is that going to be another area of growth? You did inorganic growth this financial year. There's more in the offing and big deals?
So I think, the way to look at is that each company's strategy is different, right? As far as we are concerned, we said that we are always open for acquisitions, but acquisitions will be only when they add a strategic capability to us. We are not looking at acquisitions to deliver a certain growth. Okay, that's not our strategy, and our acquisition strategy will be largely due to a strategic capability in a sector, in a market, in a platform. Only then we will do that. And we are looking out all the time. For example, the Mitsubishi relationship is an important step. It may not be a deal with a big ticket, but the point is, it is strategically an extremely important deal for us because it gets us deeper into that market. So we'll keep looking for deals. Sometimes it will be an expensive deal, sometimes it will not be an expensive deal, but it will be always focused on strategic capabilities.
Okay. And how is the competition looking now with another dynamic leader coming in competition as well? Is it hotting up? Does it rattle you at all?
I always focus on the customer.
Thank you very much.
Thank you.